How's it going, everyone? I am Tony Pawlak from Real Life Trading and wanting to give you an update with the second trade of my 5K challenge. Let's go back to yesterday and remind you of what we did. So we sold the 630, 625 bull put spread that expires this Friday, expires the 9th of July. All this thing has to do is just hang out for one night. That's all it has to do. You remember I left you on a cliffhanger of let's find out if I blow up my account or not. I'll let you know in a day if I do, because I risked my entire $5,000 account on this trade. Okay. So it gave the upside of about a $700 give or take profit after I spent money to buy it back. So I received $850 credit to do this and then a little bit on it to buy it back. So I figure about a $700 win, which would hit my 10% target for the month. So spreads have been a little bit far and few in between because of this low IV market. It's not the best setups out there right now for them that I could find. They're out there. We do them, but there's just not the great ones I'm looking for this 5K. So Tesla's had a really great pullback. I sold 630 on top of a great support zone. I felt pretty safe about it, and like I said, it just needs to not go down. Just keep going sideways overnight, open up around where it closed, and I will walk out of here with $700. Easy as that, right? Well, let's find out what happens. So we're gonna fast forward this just a little bit, and Tesla did exactly what I could not have happen. It gapped down. I woke up this morning and go, well, it looks like I'm gonna be posting a video on YouTube about how Tony Pawlak blew up his 5K account challenge in the first 2 months, which I knew was a very good possibility. It wasn't looking too great. So I did have a game plan though. I had a game plan before I even got filled on the spread. There's a reason why I sold my spread at the location that I sold it, because it is a very strong daily support. So if we don't hold that daily support, I have a clear idea that we're going lower and I can go ahead and exit the spread. I also could understand that if this thing starts to bounce off of the support, that there's a good chance that this spread will be okay, right? No matter what, I'm closing it out today. I don't hold spreads on the day of expiration, because the day of expiration is the only day it's possible to lose your max loss. For me to lose my $5,000. Now I might get close to that if it's a really bad gap, but you will not lose your max loss until the end of day expiration, right? So I wake up, I see this, and I'm like, oh, dang it, right? Just what are the odds of that? And I just go back to my trading plan. So what was my plan when I got into this trade? Well, my plan was to give it 30 minutes. So I wrote out, if this gaps down to your spread, give it 30 minutes. If it has a 30-minute candle close below it, because I'm on the support, which means it's not bouncing, go ahead and close it out. And I'd probably take about a $2,000 hit on it. Probably lose about $2,000, almost half my account. Okay, not the end of the world, but not great. But if we do start to bounce, then fantastic. And what I want to do is buy calls to offset what my spread is losing. Okay, and I'll explain that in a little bit here. So I had a game plan, and all I have to do is now follow my game plan. But I'm pretty positive I'm going to be making a video about how I blew up my account. So let's fast forward. Let's get this to the open of the day here. And remember, we sold on top of a very strong support. So I really want this to hold. This blue line is that daily support. And the opening candle blew right through that support, but then did something very interesting. So if you're a bear and you see this really great support zone on the pre-market, and you short the breakdown of that, because let's do this thing, it's a big gap down, things are getting crushed, and we should not take this out, right? They short it, and then within that same candle, seconds later, it squeezes them out. So shorts to get out have to buy to close. They have to buy the stock to get out of their short, which causes the stock to go higher. So their stops, they get in, and their stops are immediately hit wherever their stops were at. Causes the stock to go higher. This is what we call a trap. Okay, this is exactly what I wanted to see. Some sort of catalyst to get this thing to go. Show me that there's some strength off of this support, and we're not just going to blow right through the bottom of it, right? So now I go to part 2 of my plan of I'm going to look to buy calls to offset what my spread is losing. Okay, so I want to pull back. I don't want to be buying calls up here. You want to be buying calls on bear candles, especially if you're day trading. You want to get filled at good prices. You do not want to chase whenever you're trading with options. So, right there. I want to say that I bought calls right here. I did not. I bought them off of these EMAs right here on this pullback. So, it just made sense to me. Big 50%, a big candle, the 50% pullback to that was around here. Plus I have the EMAs and some support. That's where I got in. Of course, it went much lower, but my stop was down below this wick. So if we break this, this is no longer a trap. My whole hypothesis is wrong and we're heading lower. Bail out of everything else, right? Although I really wanted this thing to close above these wicks. Above those EMAs, I mean. So when we just blew right through it, I'm like, well, here we go. I just bought some more calls. By the way, I did this on my $5,000 account. So I bought as many calls as I could possibly get, which was 2 of them. I bought the 645 strike, I think off the top of my head, that expires tomorrow. That expires this current week's Friday. Okay. If we blow lower, I'm going to lose an extra $500 on those calls, plus the $2,000 plus some change or whatever for my credit spread. I was going to lose half my account in one trade. But this sentiment, this candle was telling me there is a great chance that we get a bounce, no matter how bad this looks. And remember, the stock market's always going to want to do this to you. You have a reason of getting in, you get in, and then something scary happens, and your entire reason for getting in goes out the window. Your logic, your plan, everything fails to the emotional part of your brain. And so you need to push out those emotions and remember why you got in the first place. So this candle looks terrible, and I was pretty much accepting the fact that I was going to blow up my account. All right, let's start recording this video right now and get this over with. Tony Pawlak blows up his real life trading account in the second month of this challenge, which again, I know is a pretty good possibility and it still can't happen. Using credit spreads on a $5,000 account is not the smartest thing I've ever done, but I think it's doable. I want to prove that it is. So we are in calls. I bought 2 of them. That's the most I could afford in this $5,000 account. I wish I could have bought a lot more, but at this point, not working out great. So let's just keep waiting. Again, our stop is here. We're not gonna do anything until it gets past that. I'm looking right now for it to get above these EMAs. So I want to walk you through candle by candle my emotions. Just because you've been trading for a long time or you're a very profitable trader does not mean your emotions go away. Your emotions never leave. You just get better at managing them. You get better at following your plan and realizing the game and how to play it, right? So walk you through and talk to you about my emotions right now. We're in a critical spot. This bear candle should have never happened that low. We should have bounced off these EMAs. So now I'm going, we're not looking as great as we could. So I want this thing to fight back above the EMAs there, the 10 and the 20 on a 5-minute chart, which we do. So now I'm like, okay, this thing is starting to listen. We're getting a little bit of volume to come in. Let's see what happens. Bounces off of it again. Sounds great. I'm really happy right now. Things are looking really, really good. And boom, there we go. So just so you know, my profit target in order for me to make money was at 639, 96, I think. Right here, just below 640, okay? And you realize we did not quite get there. So I went from being down $2,100 to being at break even in 20 minutes on a $5,000 account. All this thing needs to do is just go up a little bit more and I could make a couple $100 profit, right? As soon as that missed me and started to pull back, I'm like, Tony, you probably should have just taken the break even. That's what my emotions are telling me, right? You were just down $2,000. Get out for break even like this thing never happened, not the end of the world. And I'm starting to feel like I should just cut my losses. At this point, I am down about $400. Again, big swings in P&L if you're trading close to expiration. Right? You're going to really gambler's going to be all over the place and really forcing big moves per $1 move in a stock. Okay, so that accelerator's full down the closer you get to expiration, and it expires tomorrow. So this candle comes in, I'm now down about $700. I'm like, oh man, I was at break even, right? But the chart tells me to stay in it. So that's what I kept going back to the process of, forget what your emotions are telling you. What is the chart telling you? The chart's telling me that I should S-curve off somewhere around these EMAs. I don't know where, but somewhere here is the buying spot. We should rotate and go higher if we're bullish. This might be the end of the move. There was a chance of that, but it's telling me, at least at the moment, I don't want to see this bull candle taken out. It's telling me at the moment it's still looking good. Okay. Just control your emotions. It's okay. The very next candle, we hit profit target. Boom. I got a little bit of slippage when I marked it out of my call. So instead of making $200, I ended up losing like 130, give or take. But still, that is a win in my book. I was down $2,000 in a $5,000 account. It's down almost 50% of my account almost. And I was able to work my way out of it, told me to lose 100-something bucks. That is a win all day long. Live to play another day, go out and find another spread and stay alive, right? That's the name of the game when you have that small of account and I'm putting this much size, my entire account on each trade. So follow the trend, follow the charts, follow your plan, keep your emotions out of it, and you will succeed in trading. So this was a cool little trade. I'm glad the hedge worked. I'm glad that played out. And I am not making a blow up account video yet. I might next video. But this one, we're still alive. We're still playing the game. So a lot of people were requesting to look at my numbers and see actual digits. So let's pull that up right now. As you can see, the beginning of the day, my account was at 5,163. I am now at 5,194. So that is not too shabby, making a little bit of money and working my way out of a hole in this one, especially when it could have really taken out half of my account pretty easily. So off to go find the next one. That's where I'm at right now, barely profitable after a few months, and we'll just keep going. I'm a little bit behind my goal, so hopefully I can get some more setups on this pullback and start making a little bit more money on some spreads and double this account this year. Thanks for watching. Thanks for hanging out. It was a fun trade. No, I did not blow up my account yet. Stay tuned to see what happens. We'll see you later, guys. Thanks for watching.